Welcome back, investors, to Ticker Time News. I'm Adam. Thank you for joining me for the After Hours show. It is great to be here with all of you. And remember, this show is all for you. If you have a question, and this is the most important part of the show, if you have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. It's the best part of the show. It's my favorite part of the show. And yeah, so don't hesitate to ask that question, whatever it may be, and I'll do my best to answer it. And yeah, so I hope you had a good weekend, and I hope you started off better than the markets did today. They kind of flip-flopped. It was kind of flat and weak, and then just kind of gave up any of those gains that they made, except for one of the indices. It actually turned positive. But we'll talk about that. We'll also talk about cryptocurrency. It is getting wound up again. It got to pretty good highs today, and then it also gave some of that back in the later part of the day. But we'll talk about that. And of course, we've got Meta platforms to talk about. Big problems with Meta platforms. We'll do a deep dive on Meta platforms. We're also going to do a deep dive on Peloton and who could be the right suitor for Peloton. And what's Peloton got to offer, right? What's the whole reason to buy Peloton? And then, of course, Tyson's Food, they completely knocked it out of the ballpark. They beat earnings, and they sidestepped inflation. Yes, so we're going to talk about their pricing power because that is a pretty interesting story. So those are the three we'll dive deep on. But remember, the most important thing, the thing I love the most is what's on your mind. So if you do have a question, leave the ticker symbol and your question in the comments, and we will go over it live during the show. All right, let's start off today's live stream with an investing tip. And it's one of the best ways to actually make money in the stock market, especially for new investors. And the simple tip is to buy what you own. That's right. Buy what you own. It is the simplest method to understand the market. So let me reframe it into a couple of questions. Do you own an iPhone? If you do, then buy Apple stock. Ticker symbol APPL. Are you wearing a pair of Nike shoes? Well, if you are, then buy a share of Nike. Are you using a Pixelbook, a Chromebook? Are you using an Android phone? Are you wearing an Android watch, for lack of a better term, because there's so many out there, right? Then buy Alphabet stock. So if you're buying the product, if you're using the product, then buy the stock. It's a very simple strategy, and this strategy has worked better than most over the years, and it's super simple to remember. So do this for me. Give it a try, and then let me know how it works for you. And it's not something, this isn't for professionals. This isn't for traders. Long-term investing for new investors. So if you're new to this crazy market, this crazy world of the stock market and investing, follow that tip. If you own it and you use it and you love the product, I must add that part. If you hate the product, then don't buy the stock. But if you absolutely love the product or the service, then buy that stock with the goal of holding it for 5 years, 10 years, 20 years. Heck, even buy it and hold it until your retirement. But do that very simple strategy, and I promise you, it will work. Now, not every single one might work out to the way you expect it, but overall, that is a really good strategy for new investors into the investing world. So I hope you take that investing tip and use it. Okay, here's what we're talking about today. And I did tee off this live stream talking about this. So let me just reiterate what we're talking about today in the live stream. After, of course, the market update that I do at the beginning of every live show. Peloton absolutely surges on M&A speculation, M&A mergers and acquisitions. Meta Platforms is taking hits from all sides, all sides. And then, of course, Tyson Foods demonstrates its excellent pricing power as it smashes earnings. Yeah, so we're going to dive deep on those three companies in particular. Now, stocks, they erased their gains to close lower on the first trading day of the week as investors, they asserted the outlook of possible tighter monetary policy from the Fed. And of course, we're awaiting fresh inflation numbers at the end of the week. The NASDAQ closed 0.8% lower amid renewed drop in tech. Meta Platforms fell over 5% after it was brought to light that the company threatened again, I might add you, to remove Facebook and Instagram from the European Union if it is unable to collect data from users in Europe. Now, we'll dive deeper on that in just a moment. At the same time as the NASDAQ falling, the S&P 500 closed 0.4% lower, the Dow Jones was flat, and the Russell 2000, of all indices, the Russell 2000 outperformed with a 0.5% gain for the day. Now, one of the day's biggest stories beyond Peloton was the merger between Frontier and Spirit Airlines, which lifted the aviation sector after both groups unveiled plans to merge into the fifth largest U.S. airline in a $2.9 billion deal led by Frontier in an effort to cut expenses as the sector does grapple with the added volatility during the pandemic. For most of the day, though, there wasn't a lot of trading conviction as the major indices and most S&P 500 sectors wavered between gains and losses. Investors continued to contemplate whether the market actually bottomed on January the 24th in the face of rising rates and the Fed tightening plan. Trading conviction was reversed from, or I should say, for energy. It was up 1.3%, and the communication services sector, it was down 2.3%. So that divergence in opposite directions, as well as a few individual stocks. Now, energy stocks did outperform as oil prices stayed above $90 a barrel. Now, after President Biden did speak, the oil prices did come down slightly. Now, the communication services sector, it was dragged lower by weakness in Alphabet. Now, I believe the majority of that loss was just traders taking profit after Alphabet's big run after earnings. And then, of course, Meta Platforms dragged it down over 5%. Generally, there was a preference for value and cyclical stocks, of course, over growth stocks. The Invesco S&P 500 Equal Weight ETF, the ticker symbol is RSP, it increased 0.1%, as did the Russell 3000 Value Index, while the Vanguard Mega Cap Growth ETF, ticker symbol MGK, it fell nearly 1%. On earnings, we got earnings from ON Semiconductor, ticker symbol is ON. They were up over 8%. And then, of course, Tyson Foods, ticker symbol TSN, was up over 12%. They both exceeded earnings expectations, while Peloton, it jumped over 20% on reports indicating that Amazon, possibly, or maybe Nike, possibly, are interested in acquiring the company. Now, more on that in just a moment. Here's where we stand year to date. The Dow Jones is down 3.4%. The S&P 500 down 5.9%. The NASDAQ it's in correction territory, down 10.4%. And the Russell 2000, even though it was green today, it still remains down 10.4% in correction territory. Okay, before we get too far into this live stream, could you smash that like button, share this video anywhere you can, and click the first link in the description to get our top 10 stocks list and so much more. We've done the research, so you don't have to. Now, if you are watching for the first time, then may I suggest that you click the subscribe button so you never miss one of these awesome financial videos again. All right. Thank you, my friends, for doing that. I greatly appreciate each and every one of you. All right. Before we check in on Bitcoin, let's talk about gold for just a quick second. It was up 0.72% today to $1,820 an ounce. Not bad, but it seems to be trapped moving sideways. All right, Bitcoin. Just real quick before I go to Bitcoin, on the screen, I should have mentioned this at the beginning. This is the S&P 500, okay? Here's where we stand. Remember, I talked about people are wondering if this dip right here with the long candle right here on January 24th, that wick down here very close to 4,200 on the S&P 500. It was 22 points away from 4,200. Could that have been the low? And then, of course, on January the 28th, this big rebound of 2.4% in the S&P 500, was that the reversal? Or are we headed lower? Well, something to keep in mind, the 200-day moving average. If we have another day like today where we're down in the S&P 500, the 200-day moving average is sitting at 44.45. And the S&P 500 is at 44.83. So we're not too far away. That will be a key test. Will that hold as support? If not, and I don't believe February is going to be a positive month. I think it's going to be a down month. So I do not think the 200-day moving average is going to be any type of real strong support. Like the 50-day moving average has been an incredibly strong support for the S&P 500 over the past nearly 2 years now. Okay, let's get to Bitcoin. BTC USD, and I use Coinbase for the data. And this is on TradingView. It's where I do all my charting. There is a link in the description for a free account for TradingView. And if you do sign up for a paid account, you can get 30 bucks. Okay, look at the strength here in Bitcoin. It has been climbing. It's been a beautiful weekend. And the RSI is like a rocket ship. And speaking of a rocket ship, my daughter made me one of these rubber band bracelets here, and she put a rocket ship. I don't know if you can see that or not. She put a rocket ship on there so we can take our stocks and launch them to the moon, right? Or our crypto. So here we are at Bitcoin. We're at 44,184 at the moment. The RSI is just taking off like a rocket ship. It's up to 69 right now. And remember, 70 and above, you get to 80. That's oversold territory. So all weekend long, this big climb since right here, this big one on February the 4th, up 11.4% on that day. That really kicked off this momentous run, and we're up 4.1% right now. So it's been fluctuating. Bitcoin got as high as 44,533 today. And the low of today was 41,678. So Bitcoin year to date is still down 4.4%, but the past week, it is up 14.7%. So it has done a great job digging itself out of the hole that it has made. Can this rally continue? Well, the White House and the SEC are going to put forth a framework for cryptocurrency. Now, I think it will be a good thing for Bitcoin. Other cryptocurrencies, I'm not so sure. I'm on the fence on that, half and half. Now, this framework may say that Bitcoin is just too big. It's a substantial cryptocurrency, and we better not mess with it. That's what the report or the framework may say about Bitcoin. But the other cryptocurrencies, I'm not sure if it's going to get that far or not. All right, let's check on Aetherium because it is doing well as well. ETH USD on TradingView. And again, I use Coinbase for the data. 31.55 right now. It is up 3.1% on the day. Again, it is following in the same path as Bitcoin. If it's green, if Bitcoin's green, Ethereum's green. If Bitcoin's red, Ethereum's red. They seem to be in lockstep in their direction that they're moving. But I will say Ethereum is moving at a faster percentage rate, either up or down on the day. So Ethereum, it's down 14.2% year to date, but over the past week, it's up 17.3%. So it's made a really nice bounce over the past week. Hopefully, everyone was able to stack up either their Ether or Bitcoin during this low point in January. I hope you were able to stack up and buy as much as you could on the dip, because I don't think this is a permanent place for Bitcoin or Ethereum. I still believe in the long-term bullishness of Bitcoin and Ethereum. Now, February, it may be a volatile month, and we may have a wave to ride for both cryptocurrencies. But in the long run, I still believe in both of them. Okay, let's talk about Peloton. The ticker symbol is PTON, PTON, if you want. Peloton Interactive. Look at this. This is the daily chart. I always use the daily chart here on the live stream. Now, when we look at this over the past year, look at this mighty fall. Now, Peloton hit its all-time high back here on January the 13th of 2021. That was its high. If you sold on that day, congratulations, you did a good job of timing it for Peloton. And that was a high of $169 even. Right now, the stock is right around $30. It was up 20.9% today. It's up 0.3% in the after hours. Now, the big question. Who's buying Peloton? Is it Amazon? Is it Nike, Apple, or somebody else? Well, embattled connected fitness equipment maker Peloton, ticker symbol PTON, is back in the headlines today. But this time, the news doesn't revolve around eroding demand or production shutdowns or its overall fall from grace. Rather, the company has become a potential acquisition target, according to the Wall Street Journal last week. We reported it on Friday as the news was breaking. Now, at the time, the Wall Street Journal said Amazon is among a group of possible suitors for Peloton. Stoking the M&A fire, the Financial Times followed that up with its own article stating that Nike may also be interested in acquiring Peloton. It's likely not a coincidence that the rumor mill is spinning up shortly after activist investment firm Blackwell's Capital called on Peloton to put itself up for sale. Remember during our January 24th live stream, we reported that Blackwell's Capital had sent a scathing letter to Peloton's board of directors, saying that the company is in worse shape now than it was prior to the pandemic. The firm also asked for the removal of CEO John Foley, listing poor forecasting ability as a key problem, among several other grievances, of course. With the stock having cratered by nearly 85% from its highs reached in early 2021, like I showed you, Peloton is clearly in need of a shakeup, and a takeover may offer the quickest route. Peloton's current market cap of around $9.5 billion makes the transaction much more feasible, especially for the mega cap company like Amazon that has $42.1 billion on its balance sheet in cash. That's a lot of dough. Now, based on the stock's spike higher, it's evident that investors are very confident that a deal will materialize. Now, it is worth noting, though, that short interest is quite high in Peloton, at about 12% or so of its total float. Therefore, today's move is also partially fueled by shorts covering their position. Yeah, a little short squeeze. Now, I also believe that the odds are totally in favor of Peloton being acquired, and for these reasons. One, Peloton has a large subscriber base of 2.8 million users, and it's still adding new users at a fast rate, 66% as of Q2. It's not hard to imagine how a company like Amazon, Nike, or even Apple could leverage that subscriber base to create significant, and I mean significant, revenue synergy opportunities. For example, Nike could cross promote its running shoes and athletic wear to Peloton subscribers through various channels, including during workout sessions. Or it could bundle its products with new subscriptions. Could you imagine an Amazon Prime that comes with a subscription to Peloton? Interesting thought. Number two, although turning Peloton's fortunes around would take a major, uh, what's the right word to use? It would be a major undertaking, and it would be tough for just any company to pull off. But there are companies that are believed to be interested in Peloton that have both the resources and the top flight executive teams to execute a successful recovery. It's also notable that running and fitness have been focal points in areas of strength for Nike since the pandemic hit, while Amazon has also bolstered its exposure to health and wellness. Three, from a marketing perspective, Nike or Apple's mass appeal would help heal the many public relation hits that Peloton has sustained over the past 2 years. The most troubling incident involved the fatality or the fatal death of a child with Peloton's tread product. An episode that the company initially denied responsibility for, but ultimately Peloton made the correct decision and issued a product recall. But the damage had already been done. 4, the initial cost to right-size Peloton through production and personal cuts would be substantial. Once those efforts are completed, a company with the size and scope of Nike could drive production and logistical efficiencies that weren't available to Peloton. The main takeaways are that Peloton is ripe to be acquired, and it seems more likely than not that a deal will be hammered out. It wouldn't be overly surprising to even see private equity firms enter the fray as well. Now, there are potential roadblocks, such as regulatory concerns for huge tech companies like Amazon or Apple. In the end, though, I believe that Peloton's huge user base and attractive valuation, only now 2 times estimated forward sales, will be too tempting to ignore. On a final note, Peloton is set to report earnings after the close tomorrow night, setting the stage for a very interesting earnings call. But what do you think about all of this news around Peloton and a potential acquisition? Let me know in the comments below. All right, let's move on now to Meta platforms. And we have got some red flags just a waving back and forth. Ticker symbol is still FB. And as far as I know, we did not get an update as to a ticker change for Meta platforms just yet. But it was supposed to happen in Q1. But I did not hear any news about that during their earnings call when reading over the transcript. All right, we've been watching this for a while. Ever since the whole name change, Facebook saw a huge surge when it was talking about the metaverse. And there was a huge, I mean, a mass Google search of metaverse itself. And many people, not even just investors, but the general public, wanting to know, what is this thing called the metaverse, right? Well, since then, since that talk has faded, the stock, it came off its high and it traded sideways for a while. But now it's in real trouble. And down 5.1% today. It's a big drop. Now, here's some trouble. In the, let's call it the aftermath of last week's disappointing Q4 21 earnings report from Meta Platforms, regulatory concerns, they faded to the background as the Apple iOS privacy change and rising competition from social networks like TikTok or Snap consumed everyone's attention. Today, however, those regulatory concerns are right back in focus after Bloomberg reported that Meta Platforms, the company, may pull Facebook and Instagram from Europe if it's unable to keep transferring user data back to the US. Now, for some context, and this is going to get a little confusing, so I'll try to keep it as simple as possible. But in August of 2020, the Irish Data Protection Commission, or IDPC, issued a preliminary finding stating that Meta Platforms' reliance on standard contractual clauses, SCCs, to transfer data from Europe to the US does not achieve compliance with the General Data Protection Regulation. Therefore, the Commission determined that Meta Platforms' transfers of data should be suspended. Since then, US and European Union regulators have attempted to restructure a new transatlantic data transfer pact, but a deal has yet to be worked out. Without an agreement in place, a final decision on the Irish Data Protection Commission's ruling could hit at any time, with Meta Platform expecting a ruling as early as the first half of 22. A negative final decision poses a significant threat for these reasons. Number one, like in the US, the data that Meta Platforms gets from its European subscribers is used for targeted advertising, which is the bread and butter of Meta Platforms' business. At nearly 25% of fiscal year 21 revenue, Europe represents a major market for Meta Platform, and any significant disruption would materially impact revenue. 2. For a point of comparison, Europe accounted for 16% of Snap's revenue in fiscal year 21, according to the business help page on Snap's website. The company is fully compliant with GDPR and UK data protection laws. 3. With pressures mounting against Meta Platforms' family of apps, and that's that new segment they brought out, which includes Facebook, Instagram, and WhatsApp, the company may be compelled to pour even more capital into its metaverse ambitions. While these investments could pay dividends several years down the road, Meta Platforms' earnings would take an even bigger short-term hit if it accelerates its metaverse timeline. In my view, Meta Platforms' threat to completely remove Facebook and Instagram is a tactic to put political pressure on regulators to not disrupt the millions of people and businesses that use its platform in Europe. It kind of reminds me of the strategy that ride-sharing companies Uber and Lyft both implemented in California, threatening to leave the state altogether if Proposition 22 did not pass. Ultimately, it would be completely shocking if Meta Platforms followed through on its threat, given how important the European market is to the company. A more likely scenario is that Meta Platforms settles for a more restrictive data transfer agreement and/or moves ahead with a new monetization strategy that doesn't rely as heavily on targeted ads. But those are just some of my thoughts on Meta Platforms and the troubles it's facing right now. All right. How do you feel about CRISPR and Enphase heading into earnings? CRISPR, not so good. Enphase, I'm on the fence on that one, quite frankly. I do love the company, and I think it's a great long-term benefit. Let me pull up CRISPR first, and we'll take a look here. And I'm going to pop over here as well. And all right, just pulling it up on the feed over there just to take a look at this. If you look at CRISPR, I mean, it's got some good technology, it's got some potential, and it may have found its footing, but if or maybe a bottom, maybe. If you look at this fall that it's been on, I mean, this thing has been cut. 2/3 have been taken out of this thing's all-time high. So going into this, I'm not feeling very confident about it. Okay, we've got an estimated EPS of 25 cents, and we've got an estimated revenue of nearly 500 million. $496.94 million going into earnings. So that is revenue there. Corsair Gaming. Oh, okay. Not CRISPR. Gotcha. All right. Well, let's put in Corsair. Well, let me just hop to Enphase because I know Enphase is much, much better. I do own Enphase. ENPH is the ticker symbol. And we'll pull that up here and look at that. And I'm going to hop over here and I'm going to pull it up on the terminal to see what the actual estimates are for Enphase. All right. See this Enphase right here, big sharp sell-off obviously, since the middle to end of December. But this bottom that was hit here, that the overall market too also hit, the first one on January 24th, and then the final one on, what is this, January the 28th. Those could have been actual bottoms or short-term bottoms for in phase, and both of those got buy alerts here on the RSI plus MFI, and that's relative strength index plus the money flow index. So how much money is flowing into the particular security. Both of those shot off buy alerts when it hit down here on January 24th. So they could be setting up a potential floor here. Before earnings, we're looking at 59 cents for EPS, and we're looking at nearly 400 million for revenue, 399.6 million for revenue. So that's pretty darn good. And as far as, just looking here right quick, the latest upgrade downgrade was an upgrade to buy on January the 24th from Truist, and they put a $200 price tag on Enphase for the short term, so that looks good too. Overall, I feel good about Enphase. The only problem though is this quarter that Enphase just went through. It's one of the more volatile quarters. It's due to seasons changing, right? Not all of their business is in sunny California or New Mexico or someplace typically sunny and warm. Some of their business is down in, or up, I should say, in northern states where the weather is colder, and we've had a lot of snowstorms on the East Coast, and that's going to put a damper on potential revenues for Enphase. So that's my only concern for Enphase right now going into earnings, is that the potential impact of weather could have played a role for installations. So that's the only concern. Everything else from the company, I think, is in good shape, and I think is really healthy. If we go down here on the right side of your screen and we look at earnings from 1 year ago, they came in at 51 cents EPS with revenue. It says 0.10. Is that going to, why does it say 0.10? That doesn't seem right. Okay. But they beat by, that's okay. I see now. My apologies. My apologies. Let me just go right here. It's better to be right than wrong on this. So I'm going to come over here. Let this load. I'm going to quarterly, not annually. Okay. So a year ago, here we are, right above my head. A year ago, this is where it came in with EPS at 51 cents a share, and we're looking for 59 cents a share this time around a year later. Last quarter, they did 60 cents a share. So a little concern, that's pretty darn tight there, right? If you're looking at the estimate of 59 cents a share, where last quarter they brought in 60 cents a share, that's a penny difference from last quarter to the estimate. And we're in the quarter where weather can play a pretty big role and have a big impact on their earnings. So there's not a lot of wiggle room here for Enphase, but the pricing of its stock right now being down so far does help significantly because it lowers that valuation for the company. All right, now if we look here for their income, profit margin is at 6.2% last quarter. It's dropped off some, but that's okay. It's a growth company. That's going to fluctuate over time. Balance sheet has been improving with total assets last quarter at 2.2 billion. So that looks good. They're also lowering their debt, which is good. They've got a debt to assets percentage of 70.9%, which is good. So they've got more assets than they do debt. So that's a good number. Okay, so for Enphase, I think they might come in pretty on point for earnings here. But their stock being down so much, I mean, they're down 23% year to date. That's a pretty far drop. And if we're looking for any areas of support resistance, we're sitting right on resistance right now at right around $140 to $145 as resistance. So I'm not sure that it'll be able to break above that if earnings come in and meet expectations. So just a few thoughts there off the top of my mind. Otherwise, I love the company. I own shares of this company and looking for long term here. Now, if we go back 1 year ago, just to look how the stock reacted to that earnings, we go back here. I'm going to put a vertical line right on earnings a year ago. There we go. All right, now let's look at how the stock reacted to earnings during that time, and then we'll look at last quarter. So it was nearly at the height right here of its stock. A lot of momentum behind it, rising up. A lot of symmetrical triangles that it just completely gapped up through, leading up to this earnings, and then it popped one day after earnings, and then fell back down. Okay. So we'll use that to compare how last quarter went, and we got a big gap up. Put a vertical there, and you can see last quarter they beat EPS with that 60 cents, right? But they need to do 60 cent or better this quarter, so it doesn't give them a lot of wiggle room. As far as revenue, $351 million last quarter, and they need to do nearly $400 million in revenue this past quarter. I think it's going to be difficult, but the stock has already hit a low point here, and it's sitting right on resistance. So a little beat will help to push Enphase, I think, up above that resistance. If it comes in line, I think it's going to hold right around that resistance. But then guidance is what's going to be the afterburners, the secondary reaction to help the stock move or not. So, I don't know. I think it's reasonably priced. I think earnings has the potential to come in. It won't be a big beat, I don't think, because they had 60 cent last quarter and they need to do 59 cent or better this quarter. And weather has played a big part, especially in the northeast corner of the U.S. So it may be a little light. It may be. But I love the company and I feel good long term about the company. And I think the pricing here is reasonable for the stock. Okay, let's see. Agree. I'm glad we agree. Great deal on Enphase. Love the company. Yep, absolutely. Totally agree with both of those statements from you there. I think they're good. All right, let me now pull up Corsair Gaming, and I know Kathy Wood holds this one. We've talked about Corsair before here on the channel. CRSR. There we go. All right, let's pull up here to see what the earnings estimates are. All right, look at that. My goodness, this thing has been in this unfortunate downtrend, but it's been in this channel nearly perfectly. Nearly perfectly. All right, let's do some analysis here on this one. It looks like we've got an EPS estimate of 25 cents on revenue of $496.9 million. So they need to come in just like in phase and do $500 million on 25-cent EPS. All right, let's see here. The last analyst on this one was January the 21st, and this was D.A. Davidson, and they gave it a buy rating and a price target of $36 for Corsair Gaming. I don't see anything. All right, so Corsair Gaming, fiscal year 21 revenues above consensus. On January the 20th, this is important for Corsair. On January the 20th, the company issued upside guidance for fiscal year 21, which ended, of course, in December, and sees fiscal year 21 revenues at $1.9 to $2.1 billion versus $1.8 billion estimate. That's for the total year. So it might be able to break 2 billion for the year. So let's go look here at financials and let's compare this. So annually in 2020, they did $1.7 billion last year in 2020. So for the full year 2020, they say that they're going to do a minimum of 1.9 billion, which will be up from last year's revenue. So that's a good sign. Potentially as high as 2.1 billion off of the 1.7 billion they did a year ago. So that's positive news for Corsair. Let's see here. And that was reported from Corsair themselves on January the 20th. All right, let's see. All right, that's the latest from the company itself. Let's go to quarterly here. All right, so 1 year ago, they came in with EPS at 53 cents, and they got to do 25 cents or better? That doesn't seem right. Okay. Well, I guess it's because they've been going down from the pandemic. Let's see. Last quarter, they came in with 16 cents per share for EPS. It was estimated at 24, and we've got an estimate at 25 right now. So can they do better than that 16 cents from last quarter? I would say yes, but if we look here, the past 2 quarters, they've missed, and it's only gotten worse for Corsair. Now, if we look at the income statement from a year ago, they did $457 million, and they need to do $496 million this time around. All right. So just about $50 million more. Last quarter, though, they only came in with $391 million. So you can see it's been declining for the past 4 quarters. We've got 556.3 million, 529.4 million, then down to 472.9 million, and then down last quarter under 400 million, 391. So that's not a good trend being set there for Corsair. I think any positive news, we can finally see a reversal on Corsair. That is true. If they can beat, because they've gotten beaten down so low here to under $20 a share, I think any good news can definitely send this stock up substantially. I mean, if it beats, let me just measure this right here, because the most recent resistance was on their 21-day moving average, which is just over $20 at $20.25. And then there's one a little higher for resistance right around that $22 mark, right about there. So if it's got positive news off of where it closed tonight, the first line isn't much of a move. It's 4.7%. But if it breaks through that, it has a chance to run up to $22, which would be a 16.8% move. So if we take the news that the company, oops, I don't want to do that. I'll leave it right there on that line. So if we take the news that the company reported on January the 22nd, then it's beating estimates on its revenue, which is a good thing. And that means it had to have done better this quarter than it did the past 2 quarters. For them to get to $2 billion, we can actually do that right here. If we take in their financials, again, we need quarter over quarter. And we get the calculator out. $391.1. So 391.1 million. And then we add 472.9. 472.9. And then we add 529. 529.4. Then we get this 1.3 here. We get 1.3 billion. And just at the midpoint, they said 1.9 billion to 2.1 billion. So this is 1.3 billion. So if we then subtract, let's just say 2 billion. So that would be a 2 with 1, 2, 3 zeros. That means that at the midpoint, they did $606.6 million this past quarter, right? You following me? So we added up the past 3 quarters, and we got 1.3 billion, sorry, 1.3 billion. And then we subtracted out the midpoint, $2 billion, and we're left with $606 million for this quarter. And remember, this quarter, they are estimating 496 million. So if we just subtract out that 606 million, then that means they're beating by just over $100 million. You following me on that one? So we added up the past 3 quarters, and we got 1.3 billion. The company on the 20th or 22nd, it was on the 20th of January, Corsair said that they see their total yearly revenue at $1.9 billion to $2.1 billion. And if we just take the midpoint, $2 billion, and subtract out the $1.3 billion, we're left with $606 million. And they're estimated to do $500 million, which then they beat by $100 million. So that seems very interesting to me. Very interesting. And if they get a good beat and they run past the first resistance at right around $20.25, the next resistance isn't until $22.50 a share. So that's a 17.35% potential move on good news. And it seems like, at least on the revenue department, it's looking like good news. A beat of $100 million. Okay, so I find that one very interesting for earnings. Okay. They are down 8.1% year to date. So maybe this earnings could turn things around, and this low seen on January the 28th could have been the start of a turnaround, at least a short-term turnaround. Long term, the macroeconomics of this year it's not going to play well with growth companies like Corsair, but you can definitely get short-term boost, and you can get a slow tick up of a reversal. We just won't see big gains like we saw in 2020 and some of the ones at the beginning of last year. But yeah, I could see a 17% move on Corsair on good earnings. All right, cool. Any other questions, just let me know, and I would be happy to dive into them and see what we can find. All right, so then let's see. All right, where do we want to go next? We talked about Peloton. That was a big one. We talked about Meta Platforms and the problems they're facing there. The next one up was Tyson's Food. They just completely, ticker symbol is TSN. They completely just smashed through earnings expectations, and they sidestepped inflation, which was just amazing, completely amazing. And Tyson's Foods, if we look back here on the stock chart, 2 earnings ago, they had a big gap up, but not as big as today's 12.2% gap. And if we go back further, you can see this company, it does not move with big moves at all. It's usually a percent or less every day. And it just totally, totally blew it out of the water today. So on the chart here, I do think this is going to come back down. If we just put a 2-quarter trend line on this, we could probably get right about here. And then let's clone that to find a trading channel. I got to take it up a little bit higher, and then it lines up right about there. So you can see it is way outside of its trading channel. I suspect that over the next couple of days, it's liable to have a move. This isn't really perfect, but it's liable to have a move that brings it back down to at least the top end of its trading channel over the next couple of days. Because there's one of the reasons why stocks move up so quickly on earnings is because traders jump in there and they're looking for a day trade or a swing trade to buy this thing right at the beginning when earnings come out that are a beat, and then they ride it up to as high as it goes, and then they sell out. And that's why these companies can spike pretty high, 12%, but then come back down to fill in the gap, as it's called. And that's why it happens for stocks that have these explosive moves like this. There's also a trading strategy. It's called the PEG strategy, which is power earnings gap strategy. And you use it for earnings just like this. When a company comes out and they just completely destroy earnings, it's basically then you're buying in and you're holding it for the ride up, and then you dump it and you get out. So it's either a day or an overnight swing trade on the stock. And that's why it's called power earnings gap, because there's always a gap up, and that gap usually 99% of the time gets filled back in slowly. Usually it takes a few days. So I do suspect that this is going to be filled back in, the gap that it created, over the next few days, at least to get to the top of its trading channel again, and then to continue in that channel. But the way it sidestepped inflation was just incredible. So I would have to say that Tyson's food absolutely destroyed earnings, but it also demonstrated its phenomenal pricing power. Phenomenal pricing power, as it more than offset the inflationary pressures in Q1, leading to a massive earnings beat. It was actually its second largest earnings beat in the past 5 years, and that goes to show why the gap up was so significant. Consumer demand continued to outstrip Tyson's Foods' ability to supply products. Sales were also a highlight. They soared by 23% year over year in the quarter. And with inflation battering the food industry, squeezing margins even tighter and causing consumers to think about shifting their taste towards cheaper and alternative foods, Tyson Foods has done a great job shielding itself from many of those headwinds. The company still faces other supply chain hurdles, primarily regarding labor, but still, as one of the largest meat processors in the world, its ability to pass rising prices on to its customers or consumers, it's been tremendous. And those actions have more than offset other supply chain challenges as well. Tyson's Foods' pricing power was on full display in Q1 as average sales prices increased 19.6% year over year, more than offsetting an 18% rise in the cost of goods. This did allow, or it allowed for revenue to smash estimates coming in at $12.93 billion. Sales growth also helped out in all segments. Beef sales were a highlight. They went up 31.7% year over year on a 6.2% drop in volume. And the volume decline resulted mostly from labor shortages, as well as some port congestion, both of which Tyson's Foods expects to normalize over the course of fiscal year 22. And that's something we've heard a lot from in the semiconductor world. A lot of companies reporting this earnings season are saying that the supply chain problems we have, they're going to last throughout 2022. Some companies are saying that towards the end of 2022, like fourth quarter, November, December, that we may then start to see easing in the supply chain, while other companies are calling for Q1 of 2023, so January, February, March timeframe, for supply chain problems to ease. But back to Tyson's Food, chicken was also a huge standout, as sales climbed for chicken 19.9% year over year on 3.6% higher volume. Tyson's Food, it intends to make chicken its main focus going forward, and we've heard this from others. And given its rise in popularity in food service, the company is making the right move here. For a quick example, McDonald's, they noted last month that it is focused on growing its market share in chicken. And that is already made, and they've already made really good progress with new chicken sandwiches. Adjusted operating margins were also another highlight from Tyson's Food in Q1, expanding nicely year over year. Beef and pork both were nice. Beef clearly saw a sizable impact from declining volumes as margins grew 590 basis points year over year to 19.1%. Also, although chicken margins fell 30 basis points year over year to 3% in Q1, Tyson's Foods expects fiscal year 22 margins to recover to between 5 to 7% as it continues to invest aggressively in automation to help fill some of the labor gaps. Lastly, just real quick, to round off its solid Q1 figures, Tyson's Foods reaffirmed its fiscal year 22 revenue guidance of $49 to $51 billion, and it stated that it now expects to come in at the higher end of this range. Overall, Tyson's Foods Q1 results are a tremendous testament to its robust pricing power. Tyson Foods is proving its capacity to pass prices on to customers, and customers are paying it. Unfortunately, to all of us consumers, it's a big concern. But for the company stance on it, it's good for the company. Okay, let's see here. What are your thoughts on Disney? I think Disney Plus will be a key for good earnings. You are absolutely correct. Disney Plus is going to play an oversized role in determining how Disney fares. DIS is Disney's ticker symbol. Again, this is one of the companies I do own stock here for Disney. I do like the company. I've been buying in the past couple weeks too, as it's kind of hit this low, and you can see this peak that it hit back in March of last year. What was this high? $198. Yeah, it broke $200 a share. I remember that now. It broke $200 a share. Last earnings, it sunk a bit. And let's pull up on the terminal here what the estimates are. Justin, if you back up the video just a little bit, I'll put timestamps in as soon as the live stream is over. I did a whole segment on Peloton. I think tomorrow's earnings are going to be very interesting. I'm on the fence, though, 50-50. If Peloton will announce a deal, or if Peloton will announce that they've received proposals. I don't know which one's going to happen. It may just be too early. It may just be too much speculation on someone purchasing or taking over Peloton. But I definitely think Nike, Amazon, Apple, they all have good chances. Private equity firms are another potential that could hop into this mix here. But I almost think it might be a little too early for Peloton to announce that, hey, we've got bids, but you never know. Ever since last quarter, and that scathing letter from an activist investor group, they wanted to put Peloton up for sale. So there's been this feel in the market that over the past 3 months, they've had time to shore up a deal. It is a potential. But I'm not sure which direction it's going to go quite yet. I do think Peloton will be bought. I wholeheartedly believe that. I think somebody will buy Peloton. Who? Nike, Amazon, Apple, I think are in the running. Private equity is in the running. But the timing, are they taking in proposals right now, or have they selected one? That's the question I'm not sure about for Peloton. But if you back up the video just a little bit, I did a whole segment on Peloton and the issues with Peloton and why different companies would want to buy Peloton. So definitely back up this video and check that out. Went pretty far into it. Okay, Disney EPS of 63 cents, and the estimated revenue is 20.96 billion. Now, we know that subscriptions have for Disney Plus are unsure at this moment. Last quarter, before the earnings were announced, Disney's CEO did come out and say that there was a slight decline in users. But I haven't heard anything of the sort leading up to this earnings. So if we go back to last quarter they did 37 cents in EPS, and we've got a 63-cent EPS estimate. So they've got to do substantially better. Now, they did have hit movies over this past quarter. Spider-Man Far From Home, or No Way Home. Spider-Man No Way Home. I always get the Spider-Man titles mixed up because they're all about home. And but you had that movie come out. That was good. You've had several series on Disney Plus over the quarter. Hawkeye was out over this past quarter. So you have to think that these big shows and big movies had to have helped this quarter over where Disney was a year ago, and even where Disney was a quarter ago. I'm just looking here real quick to see if there's been any mentions by the company. I'm not seeing anything. Not seeing anything yet, but I don't see anything. The only thing I seen so far is that Mattel confirms license deal with Disney, and let's see here. Mattel confirms licensing deal with Disney for Disney Princess and Disney Frozen franchise. And that hurt Hasbro. They reported earnings today, and this licensing deal that Mattel was able to get from them with the Disney Princess and Frozen stuff, that really hurt their earnings today. So I suspect Mattel, who does report earnings later this week, this win from Mattel should actually help their earnings when they report. I'm just trying to look through here. There's a lot of information just to see if there's anything that Disney might have said within the past couple of weeks. All right, here's one. Tokyo Disney reduces capacity amid Omicron variant outbreak. Okay, so that means that they're going to have less revenue from that particular one. So Walt Disney, this was on January the 19th. Walt Disney creates international content group to expand pipeline of local content and continue to grow its global direct-to-consumer business. That's decent news. Um, all right, so there's nothing else in there about that. Okay. I'm back 2 weeks now, and I don't see anything else here from the company except for the international expansion and the Tokyo Disney having to reduce capacity. And then the last analyst on here, there was a whole slew of them last quarter. But the last one was January 14th from Guggenheim. They downgraded Disney from neutral to, I'm sorry, from buy to neutral with a price target of $165. That's the last little bit from analysts there. Let's see here. Yeah, that's all I see. I don't see anything else there about Disney. But I do think they have the potential to beat this one if we're looking at what content they were able to release during this quarter. I think is a good guide that subscribers to Disney Plus may have grown a bit just because. Plus, the Book of Boba Fett, so that's Star Wars. We have Marvel, a bunch of kids' content all being added to Disney Plus during this quarter. Some of which my kids dragged me into watching that turned out to be pretty good. So I think that's looking good for Disney. There's nothing else that I can really get out of the information here other than I think they are set up nice. This pullback, this, let's see, can I call it a correction? Close. They're down 7.9% year to date. They're down 9.7% in the last month. So I can't say Disney's in correction territory, but they are close to it. And when you get that low, I mean, you're starting to look for a bottom or a turn to a bear market, right? Uh, a stock that's down 10% is technically in correction territory. When a stock is in down 20%, then it's technically in a bear structure, a bear market for that specific security. But if we look back here for support lines down here around the 140 price point, if we go back here to November of 2020 through still November of 2020. Down here at $135, there is a lot of support at $135. And even going back a little bit further, if we go back here to where this red circle is right above my head, that's right at $145. So it looks like this 135 to 145, that $10 swing there, that seems to be where a bottom for Disney, at least there's good support there. So I'm going to put another line here at 135 and circle this to make it a little more evident. So we're looking in this circle right here. I'll stretch it out so we can capture the next couple of days. This is the area where there is support building for Disney. So 135 support up to 145 resistance. So that $10 area there. when they come out with earnings, I think they've got a good chance of beating it. And I think it's mainly due to capacity expanding at the parks, and of course the content that they've added to Disney Plus and sent to the movie theaters are two big, what I would think are positives for Disney going into this earnings. So I think Disney has a really good chance of coming out on top of earnings this go around. And if you look at last earnings, one that they missed in a very long time, they missed EPS by 15 cents, and they missed revenue by 268 million. So there's Disney. I think they've got a good chance of beating this time around. All right. You are welcome, Justin. I hope that helps out with your thoughts there on Peloton. And if there's anything else you want me to look at, we most certainly can do. I covered everything that I wanted to cover today. I wanted to do Meta Platforms. I wanted to do Peloton and Tyson's Food. Those were the three ones that I wanted to deep dive on today. So we have reached a point where I've gotten everything out that I wanted to talk about. So if there's anything else that you guys would like to talk about, just let me know in the comments, or I will go ahead and start wrapping the stream down here before we're all said and done. Just check in on Bitcoin real quick and see how it's doing. We've been live now for an hour and 22 minutes. All right. Just remember, if you do like my perspective on this, there are three things you can do to help out this channel. The first one is clicking that like button. That lets YouTube know that you think this was helpful, informative, actionable. Taking the URL and sharing it wherever you can. That lets other people know that you thought this video was helpful, informative, actionable. And then the third thing is to click the first link in the description, and that'll take you to our top 10 stocks list for value, growth, dividend, and momentum. Value, growth, and dividends, they're updated at least once a month. Last month, we updated them like 2 or 3 times. And the momentum stocks list, our top 10 momentum stocks, that is updated once a week, every week. So you always have the best names available. So first link in the description. Check that out if you have some time. All right, Bitcoin is falling a little bit since we first went live. It's out of the 44,000 down to 43,843. So it's holding up pretty well. Okay, well, we'll wrap up the stream here. I want to thank everyone for watching today. If you are watching this as a replay, if you have a question, leave the ticker symbol and your question in the comments, and we'll go over it live during tomorrow's show. All right, ladies and gentlemen, thank you so very much for watching. I greatly appreciate it, and I'll see you in the next video.